Hello friends, welcome to another video of this reaction series. Today I've got the OG Shashank and together we'll be reacting to the investment strategy of India's top portfolio managers.
I'm actually a little scared also because we're going to talk about reactions to all the big fund managers that are there. But more importantly, we're going to understand what they're thinking, how they're investing. And we'll try to take a spin on what we think and how we should invest.
Exactly. Let's begin.
It's going to be fun.
First, we have Deepak Shenoy. He's the founder and CEO at Capitalmind. He's very active on Twitter. He's someone
extremely active on Twitter.
And he has been writing blogs. He has been writing a lot of things about the market since a very long time. So his current asset mix is 85% in equity and 15% in debt. Nothing in gold, nothing in real estate, nothing in alternative asset class.
% equity and a 15% debt allocation is considered as a very aggressive portfolio.
Exactly.
Right? Very, very aggressive risk portfolio because tomorrow, say the Fed rate goes up or some new crash or war happens, the entire equity market might fall, and if that falls, his portfolio falls very, very, very drastically, right? So usually gold and real estate are two hedging mechanisms, where gold is obviously the safest hedge till date, and even if you look at real estate, it's a low volatility hedge play. It's not like it doesn't move up and down, right?
Exactly.
So not having that, so I'm very interested to understand, see if he's kept this for the bull run, then it's a perfect allocation, right? Because if you've started this in 2020 and you're keeping it till now, or maybe another 6 months, perfect. But if it's going above 6 months after this, right, when that whole bear market sets in, or not a crazy market, or bull run is over, then I think reducing that equity allocation from say 85% to maybe 60%, and then increasing your gold and maybe get a real estate or alternative investment class would actually be slightly beneficial.
My challenge is the liquidity aspect. Like that 85% in equity is something which is logged. You do not want to disturb that compounding. So now you're only left with 15% debt. I'm hoping Deepak Shenoy has a very big portfolio, or else this 15% might not be very much if he's in sudden need of liquidity.
Yeah, because if he has a sizable portfolio, I don't know what is the sizable portfolio, but if he has a good sizable portfolio on debt, then he'll get a fixed income from that, which should sustain for a lot of things, right? But even if he has such a big portfolio, the other thing to see is 85% is in equity. That is scary. Even if I have a sizable, if I have 100 crores and I'm keeping 85 crores into equity, boss, that is not a very, I won't be able to sleep peacefully at night, right? Unless it's balanced. So that is little scary, that I would say.
So he's like, I don't like to have gold. If any, it would be a short-term trend-based trade.
That's basically like a hedging strategy again.
Basically, like when the markets are doing very bad, he might be investing in gold to get that sudden.
Dude, I think everyone should put a little bit in SGB, right? As sovereign gold bonds. I think everyone should do that for two reasons, right? One is you get an interest kicker also, the 2.5% per annum. And it's gold. Instead of just buying the same gold outside, I go buy the gold here, right? Or if you're very traditional, just go buy normal gold outside. You don't have to actually go and buy SGB if you're not too well versed with it, right? Because they keep releasing series and there's a process to it. But I think little bit you should always have, whether it's like 3, 4, 5%.
But the returns are not very attractive, no?
It's just
a
hedge.
It's just a long run. Like before 2020, from 2011 till the start of 2020, gold practically didn't give anything if you compare it with inflation. Right?
Nothing.
So that way, it's basically just a hedge.
It's just a hedge. Yeah. So it's basically, I don't want to keep it in fixed deposit or my bank account. So I rather keep it in gold, because that one-off chance that kal zyada chahiye
2020 type scene.
Yeah. And whenever the market goes into a bearish mode, and now with the Fed rates going up and the liquidity being crunched, everyone's going to go back into safe havens, right? They're going to go back to FDs. They're going to go up. FD, I think Varik will get damn pissed. Because now that most of them might do that, right? They might start investing in gold. I would rather put in SGB than maybe keep in a FD, right? And even though it's a long period of time, keep it for long period of time.
Exactly.
At least the 2.5% will compound, and then gold ka agar bear market hai, to demand thoda aayega hi.
By the way, guys, fixed deposit is also a part of debt. So I'm guessing Deepak Shenoy also has some of his money parked in either fixed deposits, liquid funds, or any other kind of debt funds. Next thing is, all his equity investment is via PMS. 30 to 40% each in large cap and mid, small cap, and 10% is US.
That's good.
Okay.
That's good. 10% US and 30-40% each in large, small, mid. I mean, usually people keep a smaller allocation for small cap and keep a slightly higher allocation for mid and large cap, because again, the same wealth protection versus wealth growth.
Exactly.
But looking at his portfolio right now, which is 85% equity, I think he's very serious about wealth growth right now and not wealth protection.
Yeah.
So I think wealth protection game abhi next phase mein aayega. So I think going all in on these things are completely all right.
And I also feel that if he's spending like 8-10 hours every day just researching stocks, then might as well.
You know how everything's going to turn out, and you can somehow predict the tides changing. And all that.
Instead of like, if I compare him and a random retail investor who doesn't understand stocks, he's better off having 30% in small caps.
Any day. There's actually one interesting thing that I see there, which is saying how many months of emergency fund do you provision for?
10 months.
And he has 10 months in liquid funds. No, I think 10 months in liquid fund is pretty decent. Anywhere between 6 to 12 months if you can manage, I think that's great. Yeah.
What is your insurance cover like? I have a term insurance plus group medical and personal medical.
That's fine. I think everyone should have that combination.
Next is Jignesh Gopani. He's the head of Equities, Access Mutual Fund. 10% in gold, 20% in real estate, and 70% in equity. Nothing in debt. But I think 10% in gold
is equal to
basically making up for that debt.
Ideally, you should keep 5 in gold and like 15 in debt. Yeah. But I think this is well balanced. Again, if you look at it, everyone's very aggressive on equity because of the bull run. Yeah. And rightly so. But I like the fact that he's also had real estate investment. So he's done with the biggest kharcha.
What proportion of equity holding is international? 12% to mutual fund schemes. Fair. Yeah. Do you invest in US stocks?
Yeah.
Via ETFs or?
No, direct.
Direct. Cool. What's your allocation in own schemes? 90% of my equity portfolio. Cool. How has your portfolio performed over the last 1 year? Equity 20-30%. Again, decent.
That's good.
Debt nothing. Gold about 10%. Okay.
Then he would have bought it at the lowest fallen point and... it had fallen once. Gold did fall once last year.
Yes, 44,000.
Yeah, it did fall. And then I think it came back up again.
Yeah. For how long will your emergency funds last? Where do you park them? 3 months. I park it in short-term fixed deposits. So I'm guessing he's...
बहुत risky बंदा है bro.
बहुत risky, and I'm guessing he loves his job. He loves his job and he's not going to quit Access Mutual Fund.
3 months is literally your notice period, and you're assuming that the minute your notice period ends, you're getting the next job on day 1. Because you will lose... 3 months of this one is quite
risky.
Yeah. No, but then see what happens is like this, right? If you lose, it's not like zindagi kharab ho jata hai. Obviously, you have to now dip into your portfolio. Your main portfolio starts getting diluted, which core job is to increase the wealth, not pull out of that. So pay out nahi hona chahiye, pay in hona chahiye. So either he's got the best job security in life, which is crazy, but 3 months is very risky. Very risky. I would be a little scared of 3 months. I know you have they might have like a massive corpus, but you're dipping into some system that is creating wealth for you and you're removing it out, which affects your compounding, which affects a lot of things.
Exactly.
So
but I'm guessing during such times of turmoil, he might be cutting the costs drastically.
Yeah. Something is off. Or he's also, there's another thing, right? When you're working in a very high position, when you leave, you get a pre-negotiate a severance package as well. So if that is there, then you're sorted. Then I can keep 3 months. So for all the guys who don't know what that is, so if I'm in a very high post and I'm getting fired tomorrow, right? Then they have to give me a big check to let me go and just be sorted, right? So I've seen that going up to 6 months of your salary, to 3 months, to 6 months, to 9 months of your salary, even 1 year up to I've seen people giving golden checks, right? So if that is there, then that is my emergency fund. So the check is my emergency.
But that's a very bad assumption that I'll get fired. No one can.
This is scary, bro. This 3 months is either which way scary. I would never keep 3 months. 3 months is boss. मतलब सोच recession आ गया, गंदा वाला. फिर क्या? 3 months में तो कुछ नहीं होने वाला. However good you are, right? It will take time. And even to take time, it will take you 1 month, 2 months to figure out everything and then relocate and whatever.
And also one more thing, there are only n number of mutual fund and AMCs in the country.
And they're already at established position. The people who are there.
Why? अब head of equities के कितने position होंगे इंडिया में? 100 maximum.
You have to replace another head of equity.
Exactly.
Or become that person's boss who's in the company for the last 5 years.
वही. So this
living
is
off the edge.
Next is Kalpen Parekh. He's the CEO of DSP Investment Mutual Fund. So he has invested 40% in equity funds, 23% in 23% in debt funds, 22% in hybrid funds, and 15% in international funds.
Very safe.
One interesting thing. As soon as the CEO of a mutual fund house came, the portfolio is full of funds.
Yeah. Yeah.
So I'm guessing
Yeah.
they
Yeah.
only invest in their own funds.
So everything is
mutual funds.
Yeah, there's no direct investing at all. International funds, hybrid funds, debt funds, equity funds.
Yeah.
No direct investing.
Nothing. No direct investment.
Very interesting.
And no investment in real estate also. He also looks quite old.
Yeah.
I mean, at least in his 40s, and he has not invested in anything.
See, sometimes it can also be a heritage home or family home passed down. So that is also possible.
Is there no exposure to gold in your portfolio? 15 of the 15% in international funds, 5% is in gold mining funds, and 4% is in gold bonds. Gold mining funds.
देखना पड़ेगा. Even I have not heard of gold mining.
हाँ.
I've heard of gold bonds. I don't know what gold mining.
India may be a gold mining funds.
I don't know.
We have to.
I've never heard about this.
We'll research, guys, and if you want a video on gold mining funds, comment saying we
Thank
want
you,
a
Kalpen
video.
Parekh.
अभी के अभी हम लोग एक वीडियो बनाएंगे.
We keep learning, dude. What are these?
Exactly. 75 to 80% of the total investments are in DSP funds. Okay. Have you increased cash allocation? I don't keep cash. The fixed income part is a shock absorber. Okay.
That's smart.
Oh, cool. ठीक है. Next is Nikhil Kamath, the OG, the co-founder of Zerodha.
Beautiful.